Hey guys, what's up? It's Emma here. Welcome to another video on the Discord and YouTube. Thanks for joining us. And today, this is a concept that I've gone over a few times, but I really want to kind of retouch on this one because it's super important. And we have, of course, in a Discord, you have turnover on people, and we want to make sure that we are definitely giving newer traders those same tools, that same alpha knowledge. So today we're going to go over volume profile. And in order to find that, I'm on TradingView here. So first, if you go into your indicators and go to your favorite, it's VRVP, which is right here. All right. Visible range volume profile, and you click it. All right. And then on top of that, the settings for it are very important. Okay. We use 24 rows, and I always switch to ticks per row. Okay, not number of rows, because what happens with number of rows, you get these big chunks, this big chunky volume, which does us no help when it's a 5% range of chunky volume. So on this row layout, I switch it to ticks per row, and then always save this as a default, okay? So that way it doesn't undo it. Also, hold on, let's go back to default settings on this. Ooh, I might have just undone default. Reset settings. I'm going to go to reset settings on this and show you. So originally with volume profile, it's got this blue and this red, which is bullish and bearish volume. It's got our point of control, and I'll go over all this, but it's got all these different things. So let me go back and show you guys. No, I don't want volume order book. I want my VRVP. All right. So I'm going to go to settings. And again, row layout, I do ticks per row. For style, I want them all the same color. It doesn't matter to me if it's bullish or bearish volume. I think that could give you a preconceived notion of whether you expect a chart to go up or down. And I don't think that's very smart to do. And then keep your point of control on right here. That's it. So I'm going to switch it back to my default setting. It should be... Did I reset it when I did that? I sure did. Okay, so we're going to reset this. We're going to fix it. Make it all gray. And bright. There we go. There we go. And there we go. All right. Because this really, what we want it for is we really want to see these peak, because these peak points are very important in our point of control too. I'm not going to use the SPY chart for this because it's been kind of uphill the whole way. I'm going to go to a chart like, let me do Tesla, because we've been kind of in chop with Tesla, and I think it'll be a good example of really what we're looking for. Oh. All right, so pull the Tesla chart up. All right, here we go. Now I'm going to delete everything on this chart, so we're working with a clean chart. All right. Oops, shit, I didn't mean to remove my indicators. Hold on. There we go. And my regular volume. There we go. All right. How did I end up on the SPY again? This is the chart. There we go. All right. So as you can see here on Tesla, first of all, when we look at a long-term chart, point of control is the highest volume price point on the entire chart. Okay? As you can see, obviously back here's our point of control way down at $20. We don't care about that $20 level. Let's be real. We care about the level we're looking at now. So in order to do that, you can do a couple things to really, figure out which chart you want to use. Extend out to like a 4-hour here. All right, and there we go. So we're on the 4-hour for about a year and a half. And as you can see, I'm going to do a year. We're doing We're doing almost 2 years. We're at August 2022 through May 2024, okay? That's what we're looking at right here, which is a pretty reasonable area to look at. The ranges past this isn't really what we're looking for right now. The first thing that comes to mind is we've got this point of control, which is this red line. Point of control is a massive, it's like the alpha of support resistance. Like breaking over point of control is major, and being under it is major. As you can see, we had problems. We popped over it once here, but once we lost it, we hit our head. We had one big impulsive day on that Tesla news right here, and then kept hitting our head, okay? And we can't break it. So immediately, if we're charting Tesla, we already know, well, if on the weekly candle we can break and hold the point of control, we could be good. You know, it could be a really great setup for the future. However, we have spiking volume right here as well, just below that point of control volume. Shit, what had happened? So annoying. All right. So as you can see, just below that point of control volume. Oh my God. All right, so switch the point of control. No, it's back. All right, so as you can see right here, we also have pretty high volume, almost as high as the point of control, which is like the control point of the chart. It's like where you're the magnet you're going to come back to all the time. So I'm going to put a line here too, because we can see this volume is almost as high right in this area here. But also what this chart shows us is once we start breaking approximately that 200 range, we can see how low the volume gets in this price point here, how it dips in and comes back out. And then it dips in even harder all the way up. What does that tell us? That tells us that this range here and this range here are the low volume liquidity zones. What that means is way less people came to play at that particular price point in this particular time frame of charting of the last 2 years, which is really what I want to look at. So that tells me a couple different things, you know. So let's combine that with a couple things. We've got this topper right here, this wick top right there. All right, so let's add a line there. And what do you know? That's right at the area where it starts to get lower volume. So we sat in this volume shelf here and we couldn't break it. But we also know, wow, if we start to break over 205, we have a clear path. We have some extremely low liquidity up to 230. And you can tell on the chart as well, because if we stretch this out, we can see how in here, it shoots up super quick. In here, it shot down pretty quick and bounced off the volume shelf. That same line bounced off this resistance here. And it was resistance here. And it was resistance here. And it was support here. And it was support there. Do you see how this flip, the SR flip area, is the same area where we've got that spiking volume and then we get that big dip in volume? Because when we break through it, the reason we have that dip right here at this line, no one is adding exactly at that place because it's a major indecision zone. Because as we can see, and I'm going to go through and show you here, and then here, and then here, and then here, we can see how at that area right here, is constantly a point of conflict, is constantly a point where we bounce off of it or we break above it. So that immediately tells me that's why the volume is so low there, because it's a major support resistance zone. No one's entering at exactly $202 to $204. They're either entering before that at the 200 level or after that above the 208 or so level. All right, so when we combine the two and we can see that this line right here, all right, because we talked about this. This is like a secondary point of control. This line right here, I'm going to make it thick, is almost like a secondary point of control because we could see the spike is almost as high as the one before it. And then here's almost a third area point of control. So right in here, this entire area for me is a do not enter the play zone. And we've talked about this. I said, I won't take Tesla within this box. I won't do it, this, that, the other. Because when we turn on point of control, it shows us, hold on. It shows us how we're kind of trapped in that area. It's very, very high volume. Very high volume price points. So it doesn't really make sense to play. We end up with a lot of chop in that zone. It's not clean movements. It's not clean movements, you know, and it fades out through here. And we're getting ready for the entry as it fades out through here, and we get that crater point, which is our control point, which not our control point, our support resistance point. I'm going to make it blue so you know the difference. This is our major support and resistance area here. We can see, remember, we're bouncing, popping off. Rejection, bouncing, rejection. So that really tells me we have no good risk or reward on Tesla within this entire box unless you're day trading. So the zone from 175 to 203 burns a lot of people. How many people have been burnt? Like insanely burnt on Tesla in the last few months within that zone. It's because it's a murky area. All right. So with Tesla, that break of 200 in here, we have this lowering volume all the way through. And we talked about this, and I showed you how we get this strong moves each time. These are strong, clean moves. Look at this one. Look at how hard that sell off. Probably within 3 days down to that line. And on the way back up, how fast did that push up? And this is a huge, massive area. I'm talking we pushed from, what, 208 to 235. So that's like a 12% range we're pushing through in 2 to 3 days, 4 days. Like insane. Here's another one because I'm on the 4-hour chart. Here's another one. That's what we want. That's what we want. So how would we play this as a trade? All right. We love calls above 205 up to 230. We love it. And then we start getting spiking volume again. So we know in here, all right, we kind of want to trim down and wait and see what happens because the volume's starting to come up again. So really, entries want to be above the spikes. It's almost like the spikes are support resistant lines. All right. And you want to ride it through that low volume area. You want to ride it through that low volume area. This same thing here. If we lose this trend line, playing puts down, which they went down really nice. This went from 167 all the way down to 140. That's like a 20% move, you know. And then same thing here. We had even this move that looks small. You know, it's 170 down to, what is this right here? 152, that's a 10% move. And then this one, 170 down to like 100, 102. Like that's what we want to see. Those are the trades we want, all right? So unless you're already in swings and highly green coming into a high volume area, we don't want to take the trades within that area. Does that make sense to you guys? Oh, look at that. KT, we lost everybody. Oh, we lost KT too. I'm going to call him out. I see how it is. We lose 25 people the second we're not live trading. Those are the ones that that aren't going to be successful. I said it. Lost 25 people as soon as it shifted from live trading to education. Just saying. I know you're here, Kate. So, that's just a quick lesson on how to use volume profile for confirmation. Like you don't want to necessarily use it as your only entry, but for confirmations, it's great. Let's check out Hood, because Hood's one we've been talking about a lot. I don't know why it switched back. Why is it? There we go. Okay. All right, so same thing here. Let's look. So we had our point of control through all our chop here, and as we broke it with confirmation right about 1075, right where this line is, right here. All right, and now it even raise it up to here. Do you see how right at the break of this high volume shelf area? All right, from here to here, this is the high volume area we're looking at, from here to here. That's not really ideal entries. But we can see how when we break that, even these small moves are massive. It looks small, but this is $11 up to $13, $17, 20% right there. Another one, 20% right here. And by then we've established our zone, comes back down, slips back in, and then we take it again. And that's why we come back to these trades and whoosh, look at that push. Do you see how we shot through this? Now we've established this as a low liquidity zone. We've established it. And then we sit in this chop, which is creating this, of course. But we also knew, if we put on the weekly, 1660 was a major level. We know that. That's a major level. All right, let's wait for it to pop up. There we go. Here's our weekly chart, long term. All right. You can see how, well, we've identified in the range we're in right now. Here's our peak volume point. So let's pop a trend line there. Right here, 1823. Use that as part of your, and it's also a support flip. Look it on the weekly. Support, resistance, 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 resistance. It matters. It matters. And then, obviously, we're breaking out now. We broke over that 2052, 1660, and then 2052 here, and now we're breaking out again. We need that weekly close above 22. But look what happens next. All right? Look at this shelf. Look at this volume. All the way up. There is literally no volume. What that means is, so let's think about this. Why does no volume matter? All right? No volume matters because if there's not a lot of volume, there's not a lot of walls. Right? There's no massive order block sitting there waiting to reject you or give you shit or slow you down. Right here, waiting to slow you down. That's why we can never break it, never break it. It kept building, kept building, kept building. But once we've already went through the area once and we're going back through it again and we've established it, there's no walls. Because there's no volume. So there's not a bunch of cells stacked up there. So this is the alpha trades. That's why I talk over and over about if we hold that 23 and we close the week on there, like that move up through $32 should be quick. Right to this point here. And then we have a little bit more volume because it traded sideways. So we expect 35 to be kind of a major point of headache. But it's nothing compared to volume here. But then again, to be fair, we were in this area for 2 years. But do you see how these divots, basically these divots are where you could expect to move through the area quickly. So if you're going on the wrong side of a divot, if you're in a long, and say you took a long right here. Why did it disappear? Okay, there we go. Say you took a say you took a long right here, okay? And this was your entry right here. If we start to lose this area, boy, you better be ready to leave that trade. Because it's going to suck you down like a vacuum, like depths of hell. So that's pretty much my breakdown on volume profile and while it's so important. Let me stop the stream.